Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Tuesday, the 26th of September, 2023. We're just around 6:16 p.m. Central Time. So will we get a little bit of a bounce? I hope we do in the stock indices. You're up tonight a fraction. You're laying down very flat right now in the metal markets. In the foreign currencies, you're either side of unchanged, not doing very much. You're still acting very good in the energy markets, and we've had a correction. If you take a look, most of the energies fell back to their 18-day average, what I call the line in the sand, and they've come back up, and they're trying to get away from that. Now, the one market that didn't do it, and it surprised me, it didn't come up stronger so far as the heating oil, but it might. It wouldn't surprise me if it does very quickly. On the S&P, what can I tell you? This is a weekly chart of closes. That's all it is, a weekly chart of closes. You are staying under the 18-week. That gives you downside bias in the market. When I come to a daily bar chart, at the end of August, that's all this is. You were at 45.65. You're now at 43.21. So you're 230 points down in the S&P. Anyway, I cut it. My analysis that this was going to be a weak month and it would come to be one, and I had talked about it. We had the student debt issue coming. The question was, would the market get beyond the budget deficit? It is not. President Biden joined the picket line today, making history in doing so. And if I'm one of the automakers, I'm pretty aggravated. He's certainly not getting my vote. And the reason is, I think he should have stayed neutral, but he's so desperate for votes that he's joining the unions, trying to say, remember me, I went to that picket line with you, and I need your vote because I'm behind in the polls with this crazy Trump character that lost another legal case today. They're finding that he did commit fraud, and I'm talking Trump, in overvaluing properties galore. They'll appeal it, but he doesn't win anything in court. Okay, it's that simple. I'm not saying that they're stacked against them. I am certain there were shenanigans in my head going on there. Can't prove it. I've never seen anything, but I'd believe that. But in looking at the market, you know, you've taken a big plunge to the downside. Could we get short covering at any point? Of course you could. It can come out of left field for no reason at all. But is that a reason that you're going to get a change in the whole chart picture? And I don't think so. What I'd love to see, honestly, is finish it off and get into the 200-week average. You're 30 points away. Just go for it. The market's already, as you can see, running the lower Bollinger Band. It's doing just what I teach. It's either side of it. It's the Gorilla Glue trade. And are you embedded? Now get ready. Both numbers are under 20, but you can't count today because you and I don't know where Wednesday's going to close, but we can certainly go to Tuesday. Both numbers were under 20. The day before, they're under 20. The day before. So now you got your embedded reading. Two ways to look at it. If you've taken my course, you realize that there's a way to try to sell the rally. In the process, if the red line closes over 21, the odds are super strong that you're going to make a run for moving averages above the market. That doesn't mean that you don't go with the first sale. And that's what I teach. Now, there's a way to do it. It is live right here, but I'm not going any further into it. That's why you take the course. So I'll just go this way. Still looks to me like a good rally right now without getting through the lows of Tuesday. Sets the stage that the pros probably want to try to sell this market on rallies. Did we get the embedded reading in the NASDAQ? You can't count today because we don't know where it's going to be. But on Tuesday, we most certainly had both numbers under 20. We had both numbers under 20 on Monday. Do you think they were there on Friday? They were not. So tomorrow's the key day in this market. We'll see what happens. By the way, look at how this has gotten hit. Are you aware that the leader of the market, remember that monster move up is you couldn't get enough of artificial intelligence, NVIDIA you couldn't get enough of, runaways, all these. Well, now the markets have given you a correction. I seriously doubt it's going back to where this whole thing begins. So the question is, at some point, you're going to say, you know, I got about a 50% correction from the bottom to the top and back down. Maybe that's the support zone. I don't know. That's what I think traders are going to look for, and you will hear talk about it. When we come to the Dow, you're not embedded. You're trying to do it. You're under the Bollinger Band, either side. I'm looking for prices to move to the right-hand side of the Bollinger Band any point right now. So in all of them, they can start moving it. And again, you probably get a bit of a rally. So be cautious. But those that embed, you want to hit. Fully embedded in the Russell. I mean, it's just been a disaster. You've gone from 1921, 260 points lower roughly, to the 1760 level. Wow. Do I think the traders will hit the market if it gets a good rally? Oh, yeah. If you get the red to close over 21, you're probably ending the move. How do I think the move is going to end? Let's talk about that, because a month ago, if you took my report, I was bearish on all the stock indices. I showed you the reasons why. I predicted, one of the few ones I guess right, that September would follow the tradition of being very weak. My reasons were specific, and they came to light. Student debt payments October 1st, but the bigger one, I didn't think they'd solve the budget issue. I told you they'd kick the can down the road, and it's one of the reasons they did it. And interest rates, okay? They are high, and I don't think they're coming down just yet at all. I'm begging that the Fed was not going to roll over, and they haven't. So the pillars of what I was basing my decision on worked. So now that we're down here, you want to know what's going to work for me when I tell you I think a bottom forms. I'll give it to you right now. And tell your neighbor, when those markets that get the embedded reading lose it, it'd be the sign that the market has strung itself out maybe as far as it has to before it goes into the churning of October. And then the question is, can we set ourselves up for a year-end rally? To do so, we have to see that the Fed is actually through with raising interest rates, in my opinion. We have to get a budget resolution. That isn't going to happen in October. If they pass an emergency measure right now, that's mid-November. I can live with that. That fits into the time frame that I would want to see on everything. So I've already got my game plan. I've laid it out for you. Remember what I just said, but let the market unravel. In other words, unravel the bear part and get away from that. You're not done with that yet. You're not done with it in the 10-year notes. You can get all the bounces you want as long as you're embedded. The pros are going to use it to go short. 5-year. Lose the reading, get over 21, and I wouldn't want to be short anymore. But until that happens, give another rally, and I think the pros will sell it. Still looking for the markets to come lower. In the dollar index, I don't know what's going to break this. I mean, we are the strongest in the world at this point. Our economy's just on fire. You can't say that's the truth in Japan. They're in good shape. They're not bad. They're going to keep that easy money policy, but it's the third largest economy in the world, not the biggest. Okay, we're the biggest. And by most measures, the economy's still doing fine. I just looked at the Case-Shiller home price. You realize what they lost this year, according to them, they've made it all back. Now, are fewer homes selling? Absolutely, if you saw that. Is the supply of homes for sale, of new homes, bigger? It definitely is. So who's going to make money on that? The new builders. Can you go out and get a used home? I like to call it used home. Yeah, but there's fewer of them for sale. Can you absorb the mortgage? Well, there's two things you got to look at. What's a new one? But you do understand that there are mortgages out there that they're FHA backed that you can assume. Ask your broker. Okay, if they're not the jumbos, is my understanding, they're assumable in most cases. So if you've got somebody there that's got a mortgage 3-4%, that helps you buy that. Assume it, okay? So now you've got to see how that works for you. Folks, it could be a 3% difference. It's huge on your mortgage. Okay? Take a look and ask, ask, ask. You don't ask, you don't get. Eurocurrency. Until you lose this embedded reading, good rallies are still going to be sold, in my opinion. It doesn't change anything, and the same in the pound. I mean, these markets are just collapsing. You had bearish crossovers. You see that. They've come down. Look for more of those. There's more and more markets about to get them. Bitcoin has not been able to stand up against the dollar. It's still in a bear trend. Now, I'd be concerned if you took out this high right over here. That would end, to me, this leg of this bear trend. So here's the number I don't want to see taken out from my perspective, 26,915. As long as that's not taken out, the market is still looking to me bearish. The pros are probably probing it, but I don't want to see that $500 from here. If it happens, goodbye. Then we get to the Brent versus WTI, and the price difference just keeps narrowing in, which I'd expect at this point. These things can go hand in hand for quite a while right now. Now, I was looking for a correction when you lost the embedded reading. You see it right here, back to support at the 18-day average. Do you think that happened? Whoa. Then WTI, same identical thing. Do you think it happened? Whoa. And then we look at heating oil. Now, in the heating oil market, eventually I'm looking for the winter demand to come back and where we're at. I don't know if you've heard, I write about it tonight and I'm going to come here for a minute, in WTI. We store a tremendous amount of the U.S. oil in Cushing, Oklahoma. It has the capability of storing about 98 million barrels. It's down to 28 million. And when these happen, that they shrink, I think I've got my numbers right here. You can correct me if I'm wrong, but it's with the 28 and the 98. I know that. What happens is you start getting to the bottom of a jar. And all of a sudden, the oil may not be the quality you thought. It's what sank below. Generally, the pipes to take it out are a bit higher. They're not necessarily in the bottom where they're soaking. It depends how they're built and what they've done. But from what I'm reading, it's creating problems. So where is all this oil? Well, it's being used. We are really consuming a tremendous amount of it. And in that part of the country, we're not producing enough. Will the producers kick up the level? No. I've given you the flat answer, no. Will automakers kick up the level when the president goes to them next time? No. He's created his enemies, and that's where they're going to stay. It almost makes me think about President Macron of France. He's going to legislate what the refineries can sell at. He wants it to be done at cost and so on. They'll close down. I know you think I'm crazy with what I'm saying. If you make it to the point where they can't make any money, they'll go, hey, we'll save our equipment. If he allows them to operate a business making money, yes. There's a fine blend there. Look at how well China did with all that as they come in and they tell you what you can and can't do. It doesn't work real well. You don't want to do that. Free market works the best. Gouging should not be allowed. But when governments come in and tell businesses what they can charge, what their cost structure is, what their profit is, it's time to get out of the business. November, as I said, wouldn't surprise me. You get back here to fight at that 322 level. And remember, on a weekly chart, you're going to be losing right now. I think it's the October oil, and you're going to be shifting into the November on that chart. It's all automatic. Last in the Nove, natural gas. I'm not in the bull camp here. If you can embed, I think you got another leg down. But when you're not embedded and you're against the Bollinger Band, which is like this, what do? It's hard. Both numbers tonight are at 19, but where have they been? Watch this. Yesterday, I want to get there. Monday, both numbers were not under 20. I have an oversold market. I think the pros are taking money off the table. And that's where I think they're going to sit with it temporarily. Now, one of the tools I was using today, and I use this a lot, are pivot points. When I have orders in for my clients, and I want to know, should I adjust it, and I'm looking at some of my techniques, one of them I use is maybe I say, hey, this thing's closer. I want to come in. A pivot point is a center line. You have this on your charting software if it's good charting software. Then above it, you're going to have what they call R1, R2, these two red lines, and S1, S2, support, resistance. And the markets will look at it. Currency, I've seen currency ones that use the pivots and they go out as many as 5 for big moves. They're used intraday. It is not for position trading. I blend it and I look for it. When I look, I go, gee, I'm looking to come into this market. I want to establish a position. Am I down into a hard support area? And what is the slow stochastic doing with it at the same time? Did you hear what I just said? What is the slow stochastic doing with it at the same time? So I tie momentum into price. The same theory. I believe momentum leads price most of the time. Not all the time, but most of the time. So I put together a 3-part series that teaches you how to set up your charts. It's pretty darn easy to do it. How to read the two together, and gives you an idea how I teach for the other courses that I have. So how do you get this? Because it is free for you. You go to iraepstein.com. You look at free offers. You can move your cursor to the top up here. You'll see an icon. Give that a click and it'll take you there. And when you're on the free offer, since you're taking a course, take the Arun Indicator course. I think you're going to love it. It's now price and time. That is what that's all about. I'm Ira. You have yourself a good day, and I will talk to you tomorrow.